Hello and welcome to KYC. I am Sharad Dubey and the company on KYC's radar today is Fino Payments Bank. The bank is of course in focus because it's the first bank getting RBI approval to come in to the SFB, that is the small finance bank, and this is the first payments bank to do. But a lot of key questions are there because has it actually proved post-listing how the company has been doing, and also the question is now small finance bank status also comes in. So is the company actually prepared for it? That's the first question I would be asking. What will be the strategy going ahead for Fino Payments Bank now? It's almost 5 years, we could say, from their listing. What will be the bank do? Because the bank doesn't have a lending DNA. So how will that bank actually work on that front? That is a very important question. The third question I'll be interested in is what will be the expected timeline to onboard this new talent, because you will be needing a lot of new talent in this entire new setup where the bank is going towards. Also, the fourth question, which will be the most important one, is the large shareholders. They have to reduce the shareholding as per the RBI norms so that they can transition into the small finance banking space and the definition. And when will the core banking solutions be implemented? That's an overhang in the stock, by the way. So that's something we'll be asking the management. Also, how does the company navigate this scrutiny, which is enhanced right now as per RBI in this payment industry, and it comes out with flying colors? That's a question to be asked. Also, the guidance on the lending business ahead, that's one of the most important things which the interest will be coming in. But come over, let's explain you the entire process, how this actually thing happens, and also what the company is all about. There is just a basic banking, remittances and financial services. That's what the company actually does. And also looking at the important key details, they have third-party offerings as well. These are nothing but the referral loans as well. Interestingly, its a business model is asset light. They have limited branches but a vast merchant network, and the company claims 90% of the coverage is there in the entire India's distribution. They have instant B2B and B2C remittances. Also, ownership model increasing in the customer base, and if you look at the other aspect of it, there is an enhanced annuity income as well. Coming out to the target customers, this is a very different one. They are targeting large, lower income category in rural areas, and also to be precise, the people having an income of almost 2 to 5 lakh rupees per annum. That's the target customers they are looking at. And the product mix, it's a bit varied, but it's important. Digital payment is largely 30% CASA, roughly 28%, domestic remittances and cash management services are there. So a lot of moving parts are there when you talk about the product mix, and the smaller ones are also there, which are there on your screen, which you can see. But most importantly, the important news flow is that it has a pan-India presence. As of FY25, let's check out the branches, how they have actually panned out. There's 33 branches here, north, higher side, lesser kind of expansion in the west and the south regions. But net, they have a distribution mode, that we need to agree on that. But the question remains is, now it's coming to the new portion. It's called a small finance bank, and we'll give you all the details about it. But let's just give you the entire setup of how we judge a company in KYC. There are important parameters also, but this time I have tweaked the parameters because the company is going under a sea change right now. There is going to be a pivot or an inflection point in the company's journey. The first one is recent updates. That's where we are going to check. Income statement, operational metrics will be there, and return ratios will also be there. Apart from these numbers, shareholding, street cred, valuation, and interestingly, street coverage and outlook is something which we will judge the company in our show for the KYC rating. So without further ado, let's start with the first and the most important thing for this KYC is its recent announcement. Let me take some time and give you break by break what it actually means. RBI has granted approval to convert in a small finance bank, and this is the first payments bank to actually transition to this space as a small finance bank. A bank had applied for this small finance bank license way back in October, December 2023. So it is a very pivotal announcement for the bank itself. Now, there are some benefits also for this transition when small payment banks come into the small finance bank. This includes ability to offer loans, removal of deposit cap, they can issue credit cards, a wider product suite also coming in, and interestingly, the access to the priority sector lending opportunities. So the business scope actually becomes very big and the customer base is also large. Earlier the customers were there, but it was the rural segment. Now it seems like they might be going in for a higher range of customers as well. There are some key positives and negatives which I have actually jotted down for you so that it becomes very simple when I give the rating why I'll be coming at that rating. The positives of course include lending growth and revenue contribution, that is obvious. Profitability is expected to increase post the transaction. That's where the community is bullish. The MK note has suggested low cost liability advantage, that also kicks in, especially the cost of funds analysis, which I'll get to you in some time. Replacement of low yield investment with higher yielding loans, that is definitely positive and it aids the financial numbers for the bank itself. And the long-term ROE, that could rise to 17% by FY28. So that's a very positive outlook coming in. But of course, there are some negatives also. And these are the key questions we need to ask, because the company needs to perform to actually reach that status and actually sustain as well and give returns to the shareholders. The negatives include the lack of lending DNA. That's the most important question, as how company will navigate this important statement. Lending will require renewed governance structures, new employees coming in, a senior management expected to be hired. That is how the boat will going ahead. Enhanced competition in MSME and merchant lending business, that's already there. So company will have to come out with a good strategy. As of October, it's not implemented. There is a new in-house core banking solution that itself, in their previous con call also, they stated that it's not implemented yet. So that itself is a major overhang. So the company is having a couple of more overhangs apart from the transitioning overhang which is there, and the payments business across the industry. And RBI has actually enhanced their scrutiny as well. So this is of course an industry specific concern, but nevertheless this is also a minor overhang when it comes to the negatives. So I explained you both the positives and the negatives. For the first recent update rating parameter which we have created for our show, I'll be giving a neutral rating, because the company needs to perform also and show also how they are effectively transitioning. So for that, a 0.5 rating would be coming in and a neutral one for recent updates. Let's move on to the income statement part. The financials are also pretty much important. Largely, if you look at the screen, we have taken last 2 financial years numbers. Even the H1 numbers were pretty decent. Income is there are around 1847 odd crore rupees for FY25, and margins, it's almost flattish, just below the 13% mark coming in, and PAT, there has been an increase. So net, I would give a neutral rating for the company. The third one is the operational parameter. Yeah, out here largely we see the cost to income ratio, that is stable. That's roughly around 25.6 odd percent. That has actually come down. So it's a slight positive, and net interest income also a good jump coming in. Provisions and even the cost of funds, if you look at it, that has come down. That's very much important for the bank at this moment. And just look at the screen, that's at 1.9, that's gone down the 2%. So I would be giving a healthy thumbs up for these important operational metrics. Now the return ratios, they are also very much important when you judge any institution, be it a financial institution or a non-financial institution, and a decent number is there. That's roughly, you could say, around 14.4% in FY24, slight decrease in FY25, but still 13 odd percent. It's expectable. ROAs, that has come down a bit, but the leverage ratio, that is a concern for me. But net in the current scenario and going ahead, these numbers are going to improve when we transition into that small finance bank definition, and because of that, I'll give a neutral rating for this. So 4 parameters we have already discussed: return ratios, operational metrics, income statement, and recent updates. The 5th one is the shareholding segment. Over here, nothing much happening, if you're honest. Our promoters are at 75 odd percent stake, but looking at the FIs, they have actually reduced their stake. That's coming in at 2.67%. And DI is also 3.52%, is a slight reduction in 2 years at 3.35%. Retail has been relatively stable, and there is an overhang also which comes into the company, is that the large investors need to reduce their stake more so that RBI's transitioning norms are picked and the small finance banks transition also comes without any problem. So there is an overhang in stake sale as well, and the reduction is already happening. So from my side, for the shareholding pattern segment, I will give a thumbs down for this entire rating. 6th is the street cred. Largely from its listing price, I check the numbers, it's down 47%. But 1 month basis, the stock is up 8.5%, 3 month basis, stock is up 12%, and 6 month basis also, it's a decent 10%. So for the short term or a medium term shareholders, this has been largely, we can say, a decent kind of a run up. But of course, 1 year basis, there is a different story. It's down 16 odd percent. So for this divergence trends coming in the street cred, I will give a neutral rating for Fino Payments Bank. The seventh parameter is the valuations front. Remember, this is not a PSU bank or neither it's a Bajaj Finance or a very expensive kind of a stock. This is a very different kind of a setup. And now Fino Payments is having a 3.2 times price to book ratio, and 1 year forward basis, it's on a lower side. It's around 1.0 times, 3.02 times. So largely net, it's a neutral impact for the valuations. Will this be a re-rated? Will the valuations get re-rated post its new transition? That is something which the street will be watching out for. But as of now, I will give a neutral rating for Fino Payments Bank when it comes to the valuations front. 7 parameters done. The last parameter is, of course, the street coverage and the outlook. I have got them both together. Hardly tracked. Average upside potential is still 22% from current level. Stock has taken a beating from its 1 year levels. So there is some scope of up move here, and 2 ratings are there where there is a buy rating coming from the analyst. But the most important thing you should be watching out for is the outlook going ahead, and that was strong. In the Q2 con call which I heard, they're targeting a 5,000 crore lending AUM during FY 28 to 30. And interestingly, these numbers might change also as the company is transitioning to SFB, and they are lending to contribute 20 to 25% of revenue within first 3 years of the SFB, small finance banks operations. And we had spoken about it, that lending might be the Achilles heel for the company, but overall they're expecting this revenue to actually increase going ahead. So that is one of the most important questions we'll be asking the management in some time. Also, interestingly, the H2 is expected to be better in terms of profitability as well. Let's revise all the entire setup of KYC at the ratings which we have given, so that you get a clear picture and a 360-degree view coming in. Recent updates, it's neutral, but a very major update has come. Company has got RBI approval to go into or convert itself into a small finance bank. Income statement, largely decent. Operational metrics is something which I liked. Return ratios have been neutral. And going ahead, the shareholding, that's where concern. It's a major overhang as well. Street trade valuation, largely neutral. But the coverage and the outlook, that is something which I really liked. But net, if I had to give a total rating, that would be around 4.5 out of 8. And generally, this is a decent or a higher side rating which we get generally when it comes to the KYC show. Now we are joined by the management, Rishi Gupta. He is the MD and CEO at Fino Payments Bank. A very good afternoon to you, Rishi, and congratulations. This is the first payments bank to get RBI's approval for small finance bank. The journey is expected to be really tough. That's what the analysts are stating. So how prepared actually are you, Rishi? How prepared is Fino Payments Bank? What will be the strategy going ahead? We all want to know.
Thank you. First of all, let me thank the regulator, RBI. I'm grateful that the trust which they showed and converted the Fino Payments Bank into an SFB. I think that's a great testimony of the work which we have done in the last 7-8 years. From a payments bank to an SFB journey, see, we have built up a lot of rails as a payments bank, and that will come to our advantage into an SFB model. Rails around building up a technology platform, completely technology-enabled, digital-enabled platform, large amounts of rupiah transactions happening on platform. The amount of data which we have for our customers and merchant is enormous, and we'll leverage that data as you go forward as an SFB. The second is a distribution channel. As a payments bank, we have nearly 20 lakh merchants and distributors across the country. Largely 95% of the pin codes we are covered. They help us in raising low-cost liabilities. We already have a 2,600 crore liability balance. We do about 700-800 crores liability addition every year from forwards from here. That will give us a big advantage in terms of the cost of fund. Then the entire partnership model, which we have built with a lot of merchants, distributors, and a lot of companies. I think some of this advantage on technology distribution is going to be the key. Obviously, from a payments bank which didn't have a annuity income, it was largely a transaction income, so the balances of customers were also low. Once we move to a SFB model, we get a lot of advantage on building up a liability franchise, a much deeper liability franchise at a low cost because of the distribution network which we have created in as a payments bank. Over and above the liability franchise, we will focus on building up a secured lending book to our merchants, to our customers, and through that network which we will be able to build. Our ability to raise low-cost deposit is actually will help us as a small finance bank with a much higher NIM compared to the peers in the industry, at least for the first 3, 4 years of operations, which we see. And I think that those advantage is there. I would say while we have been able to, as a payments bank, we have been able to do business as a payments bank, which was the most difficult model. Lending to that extent, if you do it in a very structured approach, in a very cautious way, and do it right, focus on few geographies and a few products, I think you can build up a very robust
Right.
and a
Correct.
very model which can be
Correct,
scalable.
Rishi. Rishi, but the question remains is the bank right now is not having that DNA. That's what the street is a bit concerned about the lending part. So how will you infuse this lending DNA, to your bank now? Now you're going towards the road to the small finance bank.
The biggest DNA in any company is the way they do business. And you are right, lending is not something we have inherently, we have experience, but we have a lot of people who have a banking experience. And this has been in the works for the last couple of years. So the last hires in the last 6 months to 1 year has people who have a banking experience. We are already getting a lot of interest from people who have a lending experience, and that is a model which is already established in the ecosystem. We built up a payments model where it was not established. It was completely a new dimension to any business. So when we were able to build that model, we don't see it a challenge that from a payments bank model to an SFB, even with limited lending experience, we'll not be able to build. We will get right people, we'll get the right technology, we'll get the right AI tools as we get into this business. A lot of analytics and data which we have will benefit us. So the hiring of the right people is already on. We are in the process. We have done a lot of work in the last 6 months, looking forward to the opportunity to convert. I think those advantage will be there for us. I don't see that as a challenge because of the quality of people which is already there in the market who understands the lending business, and having done businesses where there was none in the last 20 years as Fino, I think we are in a good position to convert payments bank into a small finance bank.
Rishi, but the street is concerned about the timelines. You mentioned earlier 6 months is something which you are working on, the resources, especially on the front of getting new talent in. Can you give us some timeline by when this kind of talent, which is having a good experience in the lending space, will come on board with you? If you could give us a flavor of any timeline.
Yeah, so we were waiting for the final lessons, the in principle lessons to come. Obviously, we have interviewed some people. We'll be closing those pieces in the next 1 or 2 months. Post that, we will give the offer. So anything between 3 to 6 months, you can expect that the talent will start coming in into Fino, specifically at the top level. And as we get closer to the rollout, is where we start building up the field level talent on the ground across the country, wherever we want to build up the lending business per se.
So 3 to 6 months is the time where we'll get the opportunity to see some top level appointments coming in the lending space. Also, Rishi, there are some RBI provisions, when you're transitioning into a small finance bank, and large shareholders are expected to reduce their stake. Have you had the conversation with these large shareholders that by when they will be selling? I think 18 months is the number which I'm looking at, but what's their view coming in case if you had a chat with them?
So first of all, this is at the holding company, not at the payments bank level. So holding company holds 75% of the bank. There is some ask on the holding company equity shareholding which needs to be changed. So the lessons came only on Friday evening. We'll be having conversations starting this week with the holding company and some of the investors at the holding company level. So it's a little premature for me to actually talk about the roadmap on that. But there is already some conversation which we have had with them in the past.
All right, that's pretty interesting on that front. But apart from that, there is a overhang also. In the last con call I was hearing that the core banking solutions has not been implemented yet. Is it the same story right now, or will we see some timelines where this core banking solutions also comes in? This has nothing to do with your recent announcement, but there is an overhang and street is concerned. So can you just give us the timelines for this?
So on the core banking platform, there were two projects which we were working on. One which we were working on the whole of the core, and secondly is the core migration from FIS to Finacle. All of the core projects have already got completed, and the POCs have already done. We are now in the process of migrating some of those things which we have hollowed from the core banking to a separate technology platform. So that delivery started from early October, November onwards. So core banking platform is also more or less ready. We are in the final stages of migration. Hopefully, by end of December or January, maximum, we expect that the CBS migration should happen. We are on track for that. In fact, on the technology side, we have also done a lot of work on building up the core technology platforms for the lending bank as well.
All right, that's a pretty interesting take coming in. So by the end of December or January, the core banking solutions overhang, that is there for the stock, that might be over as well. So important date lines coming in from the management. Thank you very much, Rishi, for giving your time and explaining the road ahead for Fino Payments Banks now as it moves towards a small financial bank status as well. But in case you missed it, what we have actually done, there's a very important commentary coming in from the management, and the major announcement is it is the first payment bank to get SFB license. They are building tech platforms, distribution channels, and that's why they will be transitioning to SFB, and this will come under their positives as well. The company is estimating that there will be lower cost of funds also with the distribution as their moat, which we already know. Company will be focusing on the secured lending book, and a higher NIMs is something which they are targeting for the next 3 to 4 years going ahead. And the last but not the least is the top level talent, because the company doesn't has much of a lending DNA. So they will be hiring top level folks in the next 3 to 6 odd months, and last 6 months they have been doing some groundwork as well. And interestingly, the core banking solutions, that itself, if you look at it, they are expected to be implemented by the end of December or January. So that's the entire picture for Fino Payments Bank. Thank you very much. Stay tuned to KYC and keep watching NDTV Profit.